Good afternoon, everyone. This is Chrissy from Solstice ATR. Hope everybody's doing great on a Saturday afternoon. I want to start this video by taking a look at the first quarter of 2021 and how humans behave. Is the market can continue higher or do we get correction? Remember, most humans are assuming that there can be a correction occur at any time in the general market. Does history align or does it tell us, surprisingly, the story about what can happen whether we have a balanced 2021, a recession or not? I'm not a bear trader. I'm not a bull trader, but I was a bull trader at heart. So I've been around the block and have done a lot of different things that I shouldn't have done when I first started as a trader until I learned from my mistakes. So I don't want anyone to assume that I think the market can continue higher or can continue lower, but I want you to be open-minded to change in the market structure and understanding of it. And I will go over specific sectors in the futures, equities, and some ETFs to keep you open-minded to what the outcome can be. And before we start, you can check us out on Solstice ATR or in Twitter. This is my handle on Twitter. On Discord, this is my ID. You can DM me there. And if you like this video, hit the smash button, the ring bell, and you can subscribe on the YouTube weekly free video that I go over every week. And this video is for illustration use. We're not a broker dealer. Past performance does not indicate future results, so use at your own risk. And that if you copy it, make sure that you don't say, hey, I copied it and we are liable for it. Okay, now here we go. First of all, I have the VIX, and this is the electronically traded VIX in the market that's been around since the 1987 crash. And you have the Black Monday, then you had the tech sector, the Twin Towers, the real estate bubble in 2008, 2009. We had the pandemic of the COVID-19 in 2020 in February. So these events have been events in our history where we have expansion and contraction in the market, then expansion again. What I'm trying to say that the VIX is the fear gauge of most people. If there's fear in the market, the VIX spikes up. If there's no fear, the VIX sitting at a low area until, people get their confidence. But most people are, they try to follow the media or they try to follow the news. Don't watch the news. Trade what's given to you on the charts. Let's zoom in and go over these three major historical events that happened historically, and we can learn from them and adapt to what can happen in the future. This is why I put the VIX up here. There's the VXV, which is a shorter term VIX through the CME group. On Thinkorswim, it's not available, but I use the VIX. The VXX is for the bank and the small cap because 28% of the VIX, the VXX represent that sector. Let's zoom in first of all and take a look at those events before we can go back in history, okay? We're going to go back all the way to 1987. This was the first event that happened. Then we had the spike down. Then into 1990, we had a similar situation. We'll start zooming to the right so you can see these events a little bit more faster. Come on. Okay, this is the 1990, and you had the 1991-92, the real estate bubble. Then we recorrected again. Then you had after the 1993, there was a little minor reaction in interest rates in 94 before, 1997, the real estate bubble, that little spike here. Let's go further to the right. Okay, in 2000, 2001, this is the tech bubble, the Twin Tower. We can zoom in a little tiny smaller so you can see the events a little bit more dramatic. You can see the 1999, 2000, 2001, 2003. Then we fell back down. Then we continued higher from 2000 2003, March, April of that year. And we ended up continuing higher till 2008, 2007. Then we had the correction in 2008, 2009. Then we fell back down. Then we had the Brexit exit, the French elections in 2016. These were little events that we had side markets here, the British exit. Then you had the French election here, the spike up, came back down. Then we had the tariff, between U.S., China, and elections in 2017. You can see that little tiny spike. Then we continued very nicely to the upside. Then we had this major pandemic. This is the tariff. This is the major pandemic when we had the COVID-19. We eventually settled back down. We have not fully cleared, if we zoom in here, 100% of that gap up from the February. I still have that mark. We retested a portion of it, but we still have not been able to clear the 35 area, 40, in order to get the fear gauge back on track for the market to correct. So don't be biased to being bearish. Trade what you can see on the charts. And this is why I put the VIX as first of all on our charts before we did anything else past that. So we can go now from the VIX on the daily. We're going to go time frame. We're going to go intraday. We're going to shorten it down to a 90-day or 90-day, and we can go 4 hours or 8 hours on the charts. And if I do 8 hours, we can see just the daily chart because we can split it into three. Almost there. Oops. Come on. There's 8 hours. I'm putting it up. So we can see a little bit more condensing the time frame to a little bit more smaller so we can see the gaps up, the gaps down, and where we are today in relationship in the fear gauge. And you can see it on the 4 hour, the 8 hour charts since last November, and you had the spike, of the COVID-19 in January in London and Europe because of the lockdown and what was going on of that, African COVID, not a strain of it. It spiked us up. There was no fear. The Federal Reserve Board still printing money. Then we fell back down back in the VIX. So first of all, let's take a look at what the RTY, the small cap, is doing. We'll start with the pictures. The mini, consider her. She's the small one out of the Dow, the NASDAQ, and the S&P 500. As you can see, we had a small little correction. We have the monthly fib and the annual chart. This is our annual fib for the high. This is our monthly for January from January 4th till the high of that month. Then we have the fib extensions here. We came down and recorrected a little bit from last week's range in the small cap as well as the banking sector. And on Friday, it retraced to the 18 simple moving average, retested the 61, but fell to close right above the 50 Fibonacci, which is the high and low for the week of the fibs. That's the 50, that's the 61.38. The extensions from the zero is those ones down there, and I have extensions to the upside. So we're going to trade what we see. We're still holding on that 8 hour to 50 simple moving average in the small cap. Let's take a look at the Dow/YM. As we can see, it's in a similar situation. We have the gap from last month. I still have it, marked down here. This is the annual high. I have the fibs. We have the monthly fib. We zoom in for the monthly of January so we can see where the high and low for the month is. And in February, we fell a little bit further because February has not been, the month finished yet for me to start a new fib on it. So we fell down, we came up. Well, we've been range bound for the last 2-3 weeks of that push higher inside the range of the prior week. And this week we fell down. We tried to continue, but came back and got some resistance. We are below the 61.8 on the weekly and the 50 and the 38%. If the 38 does hold us and we continue, we break through the channel, we look for the upside. If not, we'll look for the extensions to the downside. This is the Dow. Let's take a look at the NASDAQ NQ. And we'll zoom in on the NASDAQ because the NASDAQ represent, the large cap tech sector, and I'll go over it a little bit more. We are in a linear regression channel uptrending. As you can see, since we broke out, this is the annual high for the year. And you can see it says annual high. I'll zoom in from here so we can show you the monthly as well. I'm reviewing them that way on an 8-hour chart so you can see this is the high for the January and this is the low. We are way above the 89 EMA and the 116. I have the weekly fib. We continued higher. We had a side range. We looked up after the holiday, the President's Week. We had that Monday off. Then we came back, on Tuesday. We traded the short week. We tried to get back up, but we're still inside. We have not filled that gap from the prior week, that push higher. We looked up, came back down. We tried to look up on Friday, but unfortunately the NASDAQ 100, we had the option weekly expiration, so it fell back, retraced to the 50 simple moving average. We have the fib from high to low. We know the 38 is here. We below it. We closed right above the 23 and the 50. In order to continue, we have to clear the 38, 50, 61, and the 18 SMA to continue higher. If not, we look to lose the 50, then the Fibonacci, then the 89, and a little bit further down. I'll zoom down so you can see where the gap is from the prior 3 weeks ago when we continued higher. This is what I consider a professional gap. Look up and continue. So that's what we have to keep an eye on if we come back and retrace to that 38.50 extension or the 61 from the weekly fit. Let's take a look at now ES. And the ES, the Fortune 500 company, is in a similar situation. We do have the monthly fib. I'm not going to go right all over it, but I'll go from the February low to the high. We had a weak range bound. We looked up on the holidays, came back in. We still have this gap here. I'll zoom in from the gap to look to the right. And the weekly fib, the high to the Thursday low, we are below the 38.2, the 50, and the 61. For the S&P 500 to lose this prior week range and we fall below the 50 SMA and the 89 EMA, you look for the 38.2 on the monthly fib or the weekly fib extensions to the 61 and the 116 simple moving averages. This one right here, that should hold us in place. If not, we'll look for the gap, then continue higher, and that would be the 61.8 on that side. And if this turns and goes back up and we clear the 39.30 area, 34, then we continue higher in the S&P 500. Let's take a look at crude oil, CL, and I'm going to do afterwards Bitcoin. As we can see, crude oil, from the prior week, we broke up. We fell a little bit in, then we looked up on Wednesday, then Thursday we sold off inside the range, then on Friday we fell in the range of the prior week highs. We have to hold this linear regression channel. I drew these two channels up here in an uptrend. So if we end up losing, you look for the 38, 50, and the 50 SMA to hold. If not, the 61 would be on a monthly Fibonacci fib, and we'll zoom down to show you that the last month fib, we hit the extensions and we continued higher. We do have up here 161, which we missed. That is okay. We're still in an uptrend, but the major channel is up here, your 89 and 50 and 50 Fibonacci fib. That's on crude oil. Let's take a look at BTC, that everybody's, talking, commodity change as well as, metals and stuff like that. We still haven't looked at, as well, the copper sector, but I'm going to cover gold and I will cover Bitcoin in detail. This is very important. We have the monthly fib, which is from here to here. This is our annual high. You can see I've marked the monthly fib. There's an extension. If I zoom in a little bit upper, because I don't want to put too many fibs, I can duplicate this fib from the monthly and zoom it back up, and I'll get the other extensions to the top. We do have the 161 up here still on BTC. Let's just automate it back to auto. And what I'm going to do is just zoom in this range. And I want you to be careful of the Fibonacci's, because usually they have been acting very good on Bitcoin. They are run by machines and by humans. The retracements of all those levels has been good to keeping you on track to the upside or downside on the resets. This is very important number for me for next week. If Bitcoin loses this channel, that 51,277, the 52,500 area, as well as the 54,000, I said 5,400, I should say 52,500 or the 51,277. Be careful of Bitcoin because your 18 SMA and the 50% weekly fib from high to low may not support us to continue higher. Then you come back and get the retracement back to the prior 61.8 down here before anything can continue higher, because we do have a lot of gaps in Bitcoin on these pushes higher, from Elon Musk tweeting, from Gene Simmons, from Kiss. I'm not going to go into detail. Everybody's trying to go into crypto. These apexes, when you get a large move up, people think, hey, they have the whole world, we can hold on to it. If you are holding it from way back, from 8,000, 9,000, 15,000, you are fine here, to about 45,000. But if you do lose that area, be careful. Don't be a bag holder. Take some profits off the table. I'm not trying to be bearish on it. I'm just giving you a fact. Trade what's given to you on the charts, not what you think, okay? So we do have the 18, the 50 simple moving average, very important, and the 61.8. And if I take those fibs from the the 100% annual high to the weekly fib extensions, I can add the 78 here, and I can add the 100%, which is around the 51,000. So be careful of BTC turning the opposite direction. So that's all I have to say about it. Let's go to GC. And I'll run through the other ones a little faster. Grinding lower and lower in a linear regression channel downtrend. It has hit a prior annual Fibonacci, which I can go back to showing you. This was the annual high and low. We hit the 50. We cleared the 38. So the 61 is a little bit further down. If gold cannot sustain this area, cannot bounce back above the 1824, 1812. Be careful of gold because it can retrace in this linear regression. You can see this high, this low. You can put a middle line right through it. So we are below the middle. We are above the 38 linear regression channel, LCRs they call them. If this supports it, this supports it. If not, we look for the extension to the downside, and I'm going to zoom in and show you where the monthly is. So I am not biased to either side. This is the weekly fib extensions, and this is your monthly and your 61.8. That would be a nice area for for gold to get a nice bounce between these two linear regression channels and the backside of this. I'm not biased to being bearish. I know I have a midpoint going through here, which is a channel holding right underneath the 50. Unless the 50 is cleared and we can go back up, then my mind will think the opposite direction to the upside. And if I lose the 38.2, if you put a channel right here going up this way, and you lose that, then you look for the backside of this channel, or it will act as support. Let's go now in some ETFs. I'll go over them. NYA, this is the New York stock, which represents major equities in the market on the New York Stock Exchange, similar to the S&P 500, but it's got a more broader range of the total market. This is why I'm showing it. Keep an eye on it. If there's going to be a change in trend and a turn between the 50 simple moving average and the 18 and the 50 and the 18, when they cross over, they call them a death cross. There will be a change in the trend for people that are swing trading. Change your thinking from being bullish, not just to be being cautious and taking some money off the table if you cannot trade to the short side. We're going to look at the JNK. This is the bond market. as you can see, the interest rate in Bloomberg Barclay high yield interest rates are going up while the bond market is going down and interest rates starting to nickel its way up. So keep an eye on inflation. I do think that inflation is around the corner. It's starting to show its hands, but most people are not looking at it. IEF TLT will show you the same thing. As you can see, this is the Barclays 7 to 10 year treasury, and it's in a downtrend. The par value seems to be declining instead of increasing to keep the interest rates lower. And due to the Federal Reserve Board, as well as the presidency, there's a difference in change between a Republican Party and Democrat Party. I don't want to go into it because I don't want to be biased. I'm just telling you, be careful of inflation because Yellen's now part of that board. Let's go over to look at a couple more. You can take a look at XLK. You can see it's starting to come back in. We got a wick. We hit the 116. You can take a look at the XLV. That's the health sector in the NASDAQ 100 because they do represent more than 35% of the NASDAQ 100. This is why I mentioned them in there. Keep an eye on those sectors. We're going to look at the SCHX. I'm going over them very quickly, and this represents the large cap strategic through Schwab. I'm just giving you different ETF funds or mutual funds. You can look at SCHB, and that will represent of a broad market overview of all the different sectors, such as the NYA. So you have a more pool of different companies instead of just being in the tech or technology or consumer products or heavily weighted on one side. So you are more looking at a broader market and understanding where those sectors are. So that's why I use those ETFs. Let's take a look at AAPL. I'll show you there is, let's go to like we can keep it on that range. You can see that the linear regression channel has been lost. We do have a major one down here with the 118. Apple has been testing that 128 from before area. That 126 is very important area for me. If Apple does lose this area, be careful of it. There's nothing to hold it. It is holding the 200 SMA and the 225 on the 8-hour chart, similar to a 4-hour chart. I split it into 8 hours so I can give you the 8-hour difference because of the overnight action, so you can see where the range in Apple is. You can see the annual high. You got the monthly fib extension. We got the weekly fib. It fell down, tried to recuperate, tried to get to above the 130, then it fell back in on Friday. That's Apple. If I look at Amazon, we can see it's been range bound for more than a month or so. We are in a range bound until it either resolves below the 3200 or above the 3300, 33,350. So as far as I am concerned, Amazon's been side range in the last couple of weeks. Unless you can do spreads or directional trades on it, try to be open mind to changes. Amazon. Let's take a look at Google. I will look at Boeing. This, as you can see, Google after the earning report shot up. This is the annual high. This is the monthly fib. It hit the monthly fib extension. It almost hit the 38.2 fib on the annual chart. We missed it and came back a little bit, and you can see it. And this is the weekly range. Google after the earning report has been going side range for the last 3 weeks. Keep an eye if this candle loses the 2050 and this major channel, then we may hit the 50, the 89 EMA, and come back to the prior consolidation for a nice bounce back up in Google. Let's take a look at NFLX. I said I was going to do Boeing and Lockheed Martin. I'm sorry, I jumped ship. Okay, so this is the monthly fib after the earning report, and Netflix fell down, tried to go back up. And last week's range, it's been range bound inside almost a 3-month bound range. Netflix, be careful of it. If it ends up losing that zero line, it can come back to the prior earning report and that prior consolidation. If Netflix is going to turn and clear the 550, 560 area, then look for the upside. That's in Netflix. Let's take a look at BA, Boeing. Oops. Boeing, it tried to break out of here. It's looking up. It's looking very promising. If things are going to go back online and people are going to start, traveling around the world and, fixing planes and, getting on track. Boeing has been range bound in the last 2 weeks. Keep an eye if it does clear the 220 or it loses the 205 area. That's Boeing. Let's take a look at LMT, the defense sector. Be weak or strong. Remember, each government or each House of Representative or the party, whether it's Democrat or Republican, it can strengthen or weaken the defense system. Keep an eye on Lockheed Martin. It shows you the direction, what's going to happen in the market. That's Lockheed Martin. It's in a downtrend side action. I'm looking for see if it can get any U-turn traction and go back to the 350, 360 area soon. So that's Lockheed Martin. Let's take a look at Tesla, fish in the S&P 500. As you can see, Tesla, after that really nice spike up last month and after the January, we've been range bound and Tesla's starting to come back in because the apex got too high. People are trying to push it lower. This is the earning report. You can see I did the drawing. I am looking for the 400 extension fib because it grinded back up on the weekly fib, fell back down, still continuing side action in the lower distribution of this big candle, push higher because if we lose this area, there's nothing to support it till we come back to that 200 SMA and the monthly fib from prior and the annual high. I'm not being biased. I've been trading Tesla for the last week and a half from here to the downside. As long as it doesn't clear 810, we are okay on the short side. If it does, that means the momentum is lost because our shorts were in the group from the 850, 860 area. So trade what you see. Let's go back to the ES and finish up with it. Oops, /ES. This is the S&P 500. We've been doing very well. We're still in a major linear regression channel in the upside, trending between these two lines. And I have a major one, the highs and lows here. But in between, I have this one, and I have a green one here that we lost. I have to get rid of that green one. No longer valid. If it does not, it's being tapped more than a couple of times on last month's area. Then we looked up, and it came back to it and stalled because the prior week was side action. We looked up at the holiday after President's long weekend, which was Monday, the holiday. We came back, we traded on the short week. We tried to push down. Then on Friday, we looked up and eventually fell down. We have not been able to clear the 18 simple moving average. We are holding the 50. If we do lose the 38.80, be careful of it because we can come back and retrace to the prior monthly high, which is around the 38.60. Let's call it 38.60. If we lose that, we look for the backside of these consolidation and these fibs for the 38.24. This was the consolidation. This was the prior gap. We still have that professional gap from last month have not been filled. Does not have to, but this is an area I would look for in case the market is weak. In case the market is strong, and we can clear the 39.30, we look to the upside. I hope this was very helpful for you to understand the ranges. Use the fibs and channels to keep you on track inside of a trading day, upside or downside. So you can look us up. Once again, I will show you where. It's at Solstice ATR, or you can tweet me or follow me on Twitter at Chrissy Farah, or on Discord. You can DM me if you'd like to join our group. Look forward to seeing you. Take care. Over.